Welcome to Beyond Profile. Today is September 6th. It is the new month. A lot of kids going back to school today, and we have a market that's a lot lower. Markets trading in continuation of last week's job numbers. We got some European news this morning, and we're a lot lower. We actually had a Globex session yesterday that traded all the way down to the 1138 area on the S&P market. This was the monthly point of control for the ES market, and you can see if you look at an intraday chart where we came down to that level and actually bounced. That would be what we call a key reference area, a significant level in the market. It was the highest volume node for the whole month of August, believe it or not. During this stage 3 of unfair lows and unfair highs, we balanced, and we had, the majority of volume had went off in that area. Had you been awake last yesterday playing the Globex session, you saw the markets coming into that. We would have taken a trade, for the bounce off of that, because it acts like a foundation in a house. If you're going to build something, you got to have a solid foundation. Well, in the example here of the monthly point of control for August, you've got a sound footing there for the market to build from, and we got the nice bounce off of it. Actually rallied as high as looks like 55, 56 this morning in the marketplace, and now pushing back down to 1143, 1145 here this morning, and we're still about 2 hours away from the open. So a lot of volatility this morning. Again, continuation of what we had seen last week when we had failed our stage 3 on our daily time frame, which means that we had our auctioning process from the unfair lows to the unfair highs was in about a 100-point value area for basically the whole month of August. We, after last week ago Friday on the Jackson Hole, the market had a big move off of that low, bounced the following Monday on a gap open, continued, looked like we were going to stage 4, which would have taken care of all of these imbalances from the previous move to the downside. But by the time we got to Thursday, the market completely reversed that, pulled back inside of the prior stage 3, and then Friday we gapped down on the jobs number, and of course yesterday in the Globex session we have another gap down. So the market's doing what we expected would have had occurred. When we get a failure out of a stage 3 that was supposed to go to stage 4, then that means that the market will auction at some point to new lows here. We're expecting to get new lows underneath the prior 1095, 1096 area here on the S&P. We at least get an extension underneath those prior lows by at least, let's see what we have here, 30 points. So underneath that last low, that puts us, 1075, and I believe that we had some levels below us here that are naked. There's some high volume naked, 72s, 81s, all of these areas here, high volume areas that have not been touched. They've been left open from actually some time ago. If you look in the chart, it goes back a while. I mean, this would go back to well before even last year. And actually there's still looks like still a gap over here too at 1090 area. So there's a lot of things here that are now in play for the downside. Of course, not only is the economic data, world events pushing us lower, but even the charts from the auctioning process are giving us the rotation back down in the marketplace to these areas that we're concerned about as far as us going and making new lows. Now, one of the first crutch points that you have to look at is this 1138. This is August's point of control. In the overnight during the Globex yesterday, we had a nice bounce off of that. That will become significant reference point for us this morning. We actually have the Globex lows just slightly a little bit lower. It looks like 36s. Remember, it's an area, but the first time we came into it yesterday, we did have a nice bounce, almost 10 points. I should say Sunday night. Yeah, yesterday morning in the Globex session, by the time it closed up by 11 o'clock. And then in the Globex last night when we reopened, the market went slightly a little bit lower underneath that area, but if you look at it, there was a 2x retest and the market continued to move up all the way to the 56 area. So we've got several gaps now. Obviously the gap closing from Friday, 69s would be one of our first areas that we would want to see this market try to go back and fill. We actually have an island top reversal. We had this gap from the Jackson Hole to that Monday morning, that gap open, and then we had the gap down from Friday. So we have a technical island top reversal up here into that stage 4, which again is very bearish signal to begin with. It doesn't look like we're going to go back and fill that gap anytime soon, especially with the gap down this morning. First come is the 69 level from last Friday. That's going to be our first area of contention, if you will, or trying to get back in to fill that. So you've got now two gaps, this one here and this one here on the top side, and how long will it be before we go back and actually get those gaps filled? So all of the markets looking the same this morning. You know, the Nasdaq lower, the YM lower, a lot of things lower back into those stage threes here on the daily time frame, which again, from the auctioning process, will not be surprised to see it go out the other end of this and extend the same distance that it did in this failure of the stage 4. Now, one of the things to watch is when that does occur, if we have a probe failure underneath the stage 3 and there's no follow through to a new stage 1 on the daily, then one can look to get long, and we will take out all of this to the prior highs and continue right up back to 1250, 1271s on that. That's a big if you will, considering what's going on in the world and the economic picture across the globe. That would be a big if. But just from the auctioning process, if we take the same simple steps of the 4 stages of market activity and we apply it on the daily chart, just like we do in an intraday chart, then that would be the expectation, and that could be what would happen in this if it did in fact fail, just like it did here. It's failing the stage 4, it's going out the other side of it. It's just a matter of time. Time is obviously your worst enemy, just like it is on an intraday basis when you're looking for those 4 stages of market activity during the day. We're looking for them on a daily basis, so it's going to take several days for it actually to unfold. Okay, folks, you have a great trading week. It is an abbreviated week because of the Labor Day. Kids going back to school this week. Everything kind of going to get back into gear here. Traders will be coming back into play after August. A lot of guys take vacation and don't come back until September. But now we're going to have kind of everybody back, and things should get back to some normalcy as we roll back into the fall here. All right. Have a good trading day, and we'll see you in the room.